Hello everyone, welcome back to my channel. In my previous video, we understood why investing in international mutual fund is important and how they can help your money grow faster. Today, in this video, we will talk about some important international mutual fund where Indian investor can invest. So let's start. Number 1. Edelweiss Greater China Equity Offshore Fund. It is called a fund of fund. That means it doesn't buy share directly. Instead, it puts all its money into another big international mutual fund called JP Morgan Greater China Fund. You give money to Edelweiss. Edelweiss send this money to JP Morgan Greater China Equity Fund. Benchmark of this fund is MSCI Golden Dragon Index. What do you mean by Greater China? It is not just mainland China. It includes 3 big places: China, Hong Kong, Taiwan. These places together are called Greater China. This region has many new ideas, fast growth, and big companies, which is why investors are invested in it. In this graph, we are comparing the 5-year, 3-year, and 1-year return of different international mutual funds. This comparison helps us understand which global markets perform better in the last 5 years. Now let's understand the chart in details. First, the fund Edelweiss Greater China Equity Offshore Fund has given around 0.6% return in 5 years, which means investor did not make money. Now look at the US focused fund. The fund Motilal Oswal Nasdaq 100 Fund delivered about 18% return, which is very strong. This is because US technology companies like Apple, Microsoft, and Nvidia performed very well. Similarly, Motilal Oswal S&P 500 Index Fund also gave around 17% return, showing consistent growth from the US market. Another fund, Kotak US Pacific Equity Fund of Fund, gave nearly 18% return. Funds like Franklin US Opportunity Fund and ICICI Prudential US Blue Chip Equity Fund also delivered good return between 9% to 14%. So the main conclusion is very clear. Over the last 5 years, US focused international funds performed much better than China focused fund. Now we are looking at the 3-year returns. Edelweiss Greater China Equity Fund gave only about 14% return. Axis Greater China Fund gave around 13% return. Motilal Oswal Nasdaq 100 Fund has delivered around 30% return in 3 years. Kotak US Pacific Equity Fund also gave around 30% return. ICICI Prudential Nasdaq 100 Index delivered about 30% return. Franklin US Opportunities Fund gave around 22% return. Motilal Oswal S&P 500 Index Fund gave around 23% return. So overall conclusion is very simple. In the last 3 years, US market clearly outperformed China market. Now we are looking at the 1-year return. Edelweiss Greater China Equity Offshore Fund gave around 36% return in 1 year. Now look at Axis Greater China gave around 39% return. Motilal Oswal S&P 500 Index Fund gave around 22% return. ICICI Prudential US Blue Chip Equity Fund gave around 21% return. Kotak US Equity Opportunity Fund gave around 23% return. Motilal Oswal Nasdaq 100 Fund of Fund gave around 14% return. But remember one important thing, market moves in cycles. Sometimes US perform better, sometimes emerging market perform better. That is why diversification across all countries is always a smart strategy. Past performance is not guarantee of future return. Always remember this.